Hello, this is Barbara Kolm again at FreedomFest this time, and I have Peter Earle with me.
Yep.
Peter has been a speaker at the Free Market Roadshow, unfortunately only once, and we want to make sure that he comes back.
There will be more, I think. Yeah.
Many more times. Peter, thank you very much for taking the time.
Thanks for having me.
Peter is, as I mentioned, a research fellow at AIER. He has a PhD in economics, of course. He has a couple of other educations, also a master's, and he has been in finance for a very long time.
Almost 30 years.
An MBA in finance. And he actually only started in 2018 at AIER. Before you had a long career in practical real world, but you do a lot of research. And I would like to talk about your research, especially on the finance industry, finance markets, financial markets, but also there is a hot issue these days, dollarization. So what is dollarization and why is it beneficial for countries? But let's really start with the basics, that you can explain it to our audience. What is dollarization?
So de-dollarization is essentially when the primary global reserve currency, which is the U.S. dollar, which has become essentially the default currency for transactions, for acting as a unit of account for denominating trades, and also for settling trades, is circumvented. So a lot of nations that formerly used the U.S. dollar are now trying over the last 2 or 3 years to get away from the use of the dollar.
And what are the benefits of getting away from the use of the dollar?
So the benefits of using, I'll talk about the benefits of using the dollar first and then about getting away from it. The benefits of using the dollar is that there's a few things. First of all, it's very liquid. It can be found everywhere. Compared to many other nations of the world, the Federal Reserve does a passable job in monetary policy. It's relatively speaking. Certainly after the gold standard in 1971, that performance
this would
varied.
be an extra topic that I would like to cover because when the gold standard was finally dumped, this was a disaster for everyone.
Absolutely. Anyway, just finishing that. Another perk of using the dollar in international trade is that the U.S. has a very broad and deep market for securities. U.S. Treasuries, bills, bonds, and notes are extensive, and that means if you have to transact in dollars and you're going to keep a pile of dollars, billions of dollars in foreign exchange, you can get a return on it. So that's the reasons why the dollar became popular. It has a lot to do with high cost of exit and all that sort of thing, and it's become by maybe the 80s, maybe by the 1990s, it was, I believe, using over 80% of transactions.
Wow. So there is other reasons also why people de-dollarize now. What would be those other reasons?
So the main instigator of that trend over the last couple of years was really in February 2022, when Russia invaded Ukraine, and the U.S. took the almost unprecedented act of kicking Russia out of SWIFT and seizing U.S.
Just for our audience, what is SWIFT, please?
So SWIFT is it's a messaging system that's been around since 1971. It stands for the Society for Worldwide International Financial Transactions. It's going to be on Jeopardy one day.
Yes.
But anyway, by kicking Russia out of SWIFT in response to its invasion of Ukraine, and by seizing foreign exchange balances, reserves, they essentially, given the prevalence of the dollar, you're essentially kicked out of the global economy. And so that had already happened to some extent with both Iran and Afghanistan over the past few decades. But Russia's a G7 country, and what it did was it not only informed many of America's trade partners and adversaries, but even many of its allies, that dependence on the dollar is a vulnerability, and one that if they don't want to avoid, they should at least have a way to hedge away from and find alternatives to. And that's what's that's what's really prompting 2 years of really intense efforts at finding alternatives to dollar use.
So what kinds of alternatives would there be?
Right. So there are ironically, one of the things has been gold. Central banks have been buying gold, at the fastest pace since 2008 and before that. So both allies and adversaries of the U.S. have been buying a lot of gold. Another is the cryptocurrency complex. So not really Bitcoin so much as stable coins like USDT and all that have been used. And there's also, to some extent, a lot of the former Soviet nations have have a history of doing payment in kind, so they can actually trade goods for goods. And there's also there have been a few attempts to come up with alternative currencies, but I think that's the least likely way it will go, because that takes a very long time to develop, the kind of network effects that would be necessary to catch on. So gold, stable coins, trading in other bases, that kind of thing, trading for commodities, that sort of thing.
Yeah, but all those are no official means of exchange.
Right.
And as we call it, legal tender.
Right.
So do you think there will ever become legal tenders? Or what tendencies do you see at the Fed or in the US, whereas we see totally different ones in the ECB,
Right.
totally locking up things and going into the direction of central bank digital currencies?
Right.
And will prohibit all the other things. And
that is another possibility of CBDCs. It's a good point. Yeah.
so what do you think? Where will the Fed go?
So, in terms of de-dollarization, for a while I had been saying that I thought it would take decades to be accomplished. I think it could actually take place, sooner. Now, I don't see the dollar ever being fully replaced, but the question is, could there be a move in de-dollarization substantial enough to affect the dollar's exchange value, and then eventually, because of the lack of use of the dollar, affect the market for treasuries? And I think that's possible. I still think it would take many years, but I don't think it would take decades necessarily. And part of the reason is because, the U.S. also has an incredible debt burden now.
Yeah.
The U.S. is
But
less.
this is true to many other countries.
That's true. Yeah. There's just there are a lot of factors I think that make maybe not replacing, but hedging away from the dollar a very attractive prospect for other nations right now. And in the last 4 years, the Fed has made error after error in their policy, and so a lot of nations are thinking, why are we relying on a nation which itself doesn't seem to get monetary policy as right as it used to, or as right as others can? So, yeah, I don't see the dollar ever disappearing or not being used at all, but I could see it, taking a second or third, seat to something else that comes along.
Well, let's take a step and look at the BRICS countries.
Right.
There was an attempt half a year ago about creating a new BRICS currency that is based totally on gold.
Right.
How do you see that attempt?
So the BRICS nations, especially since they expanded by including 5 more nations, it used to just be Brazil, Russia, India, China, South Africa. Now it includes Egypt, Ethiopia, Iran, Saudi Arabia. I'm missing one. I can't remember.
Yeah, one African
UAE.
country. Yeah.
The UAE as well. Malaysia was going to come in, but back down to the last minute. And Argentina was going to come in, but ironically, right now, Argentina is dollarizing, not de-dollarizing. Those nations represent a significant portion of global GDP, and they represent a significant commodity production, capability in terms of raw materials and all that. They still transact a lot in dollars. I think they could come up with some sort of alternative. But the thing is, most of the backbone politically of most of the countries in BRICS is authoritarian, and they don't really respect private property rights. And I think that's a huge hindrance to making the kind of headway that they like to make.
If you want to save sound money, you also need the protection of property.
Who's going to buy a bond in a country that could just seize it and take it away from you? That's the whole reason I want to leave the dollar in the first place.
So, now then we can take a step back towards cryptos and blockchain technology.
Sure.
So this is the ultimate protection of property rights or not, from your perspective?
I mean, the cryptos have been a great innovation. I mean, people have argued that it's the greatest innovation in money in 500 years, or at least, some period of time. I don't think Bitcoin or most cryptos are good as money. What I believe is that they are good as a place to hide in,
to store a value.
Right. If you're in a nation that has a hyperinflation or even just a galloping inflation. I mean, we talk a lot about hyperinflation, but a mere 10 or 20% a year is a very serious thing. So I think that's what the role that they serve. But I mean, I don't think that they're very good as money. They can be used as a medium of exchange. They're still very volatile. People are not denominating goods and services in Bitcoin, so that's another thing. Those could develop over time. The other thing is that one of the hindrances of Bitcoin is that there's still the on and off ramps. You still have to convert dollars or euro or whatever it is into crypto. So I mean that's a weakness in the chain of sort of events towards getting into crypto. Whereas gold, you can buy it many places. You can buy it for cash, and that's still and gold is still broadly accepted as money in many places, especially many developing nations. So I think it's a great innovation. I don't think. And maybe for a nation that's kicked out of SWIFT, Bitcoin might work for a while, but I don't think it's good as money over a long time.
Well, talking about money in cash.
Yes.
How do you see the role of cash these days?
So I think cash is under siege right now because, over the years, central banks, in particular the ECB and the Federal Reserve, and to some extent the BOJ and the BOE, I think all of them have tried to engage and have sought to engage in more and more unconventional monetary policy. And the apex of that would be increasing levels of
only unconventional monetary policy. I would say at least the ECB.
So one of the things they want to do, of course, they want to go into negative rates. But the thing is, negative rates really are only practicable if there's really no cash. Because if you eventually start to tell people that they're going to charge them money for holding their money in banks or other financial institutions, they're going to pull the money out. So the move towards a cashless society, whether in the name of being able to allow central banks more latitude for policy, or whether in the name of CBDCs on the retail rather than wholesale level, that move is one that would bring about the possibility of some really sort of unusual, less unusual than it used to be, but really unusual and damaging central bank policies. And additionally, it would hearken the arrival of a personal financial surveillance state. Everything you do would be seen. Cash, whether it's dollars or whatever, we have a lot of criticisms of modern fiat currencies, but cash is a buttress against financial totalitarianism. And whenever somebody gives me a reason for moving away from cash, whether it's criminals use it or something like that, what I hear in the background is this is an attempt to spy on everything I do financially.
And well, this is actually the big danger. I mean,
Yes.
As long as we are free to use whatever means of payment we want, whether it's credit cards, whether it's alternative means of payments, whether it's cash, that's fine. But I want my choice.
Yes, exactly. I mean, there's arguments have been made that cash is used by it's the same arguments against Bitcoin. Cash is used by criminals, whatever. Oh, come on! I mean, that's always been the case.
This is the argument for the French also to reduce to kill the 500 euro bill.
So that's exactly what in the U.S. they want to get away with anything above $20, which is just ridiculous. I mean, it's a very transparent attempt to limit individual liberty and individual freedom of transaction. I mean, in a sense, a freedom of expression. I pay in the means I think are best for me.
And I don't want to be controlled in each and everything.
I don't want
individual.
I don't want anybody to look and see that I took a cab ride. I mean, even if it's innocuous, it's my business.
Or if you buy cigarettes or alcohol or.
So that is another thing, and that is that one possibility is that, especially with CBDCs, the worry is that, eventually a sort of a social credit system could arise where, if let's say, if I spend CBDCs, if I'm a smoker, eventually the government could say, well, we're going to change your personal rate of inflation or your taxes because, you're doing something that's unhealthy. It's going to cost the taxpayer money. So there's a lot of really sort of, science fiction-y, but really sort of uncomfortable and totalitarian things that could arise from this. I don't see why anybody could be in favor of CBDCs except for central bankers and
governments,
exchequer, officials.
Well, in Europe, it was the European Commission who actually was pushing for this decree, actually, and then the ECB, of course, followed through happily. So let's talk about if we are talking about ECB and Fed.
Sure.
Let's talk about the mandates. I mean, price stability, financial market stability, and in the U.S. also labor market stability.
Yeah, I mean, I could argue that the Fed now has 5 mandates.
Which is?
Of course, they have price stability.
Yeah.
They have,
where they fail.
They have, maximized employment, which is strange because who knows what maximized employment is? You have Hayekian knowledge issues there. But I mean, another one is also macroprudential stability, the idea of keeping banks secure, all that sort of thing. They also have developed maintaining medium-term interest rates. reasonable, I think they call them medium-term interest rates. And more recently, they've developed a social mandate of supporting ESG and DEI policies. And the way they do that is not with interest rates, but rather through their role as a bank regulator. The idea being they could, force banks to maybe change their rate of interest for lending to things like gun
Which are
funds or
not
funds,
green.
right, which are decidedly ungreen or non-green, right? And also maybe have social policies that they don't agree with. So, yeah, I mean, every mandate, the Fed, even if the Fed had one mandate, which would be price stability, it faces considerable knowledge era, issues, and it has all the problems of Hayek spoke about, knowledge being late, knowledge being contextual, knowledge being not local. But I mean, those get wildly out of control when some of these different mandates conflict with each other. For a while, we had rising inflation in the U.S., we had slowing disinflation, and we had rising unemployment. What does the Fed do then? The best news for the Fed was in the last two reports where inflation began falling and unemployment began rising, because there's a clear signal. But ultimately, they have to choose between mandates, which results in sometimes self-defeating policies.
Well, there's a lot more to say. There's one more thing that I would like to ask you, Pete.
Sure.
So we have talked about de-dollarization.
Yes.
But there is a country, and you mentioned that once in the talk, that is going to dollarize.
Yes.
Maybe.
Yep.
So that's Argentina.
Yep.
Why would they do so, and what would be the benefits for them if they did?
Right.
Get rid of the peso or run parallel even for a while. So how do you see that as an expert?
This goes back to the great hyperinflations that took place after World War II. Of course, we always talk about Weimar Germany, but there was Hungary as well. And really, after a while, the only way of entering hyperinflation is essentially to outsource your monetary policy to another nation, right? And so, by adopting the English pound or the U.S. dollar, something many nations have arrested, in Zimbabwe, the euro and the South African rand, adopting the currencies of better managed, again, relatively speaking, currencies, takes the monetary policy out of the hands of the nation. So, however bad the Fed has done in the last few years, it's still orders of magnitude better than the Argentinian central bank has. And so by putting dollars in people's hands instead of the pesos, the view is that will sort of arrest the hyperinflation, sort of outsources the management of the currency, takes away the perverse incentive to inflate in all turns. And I think it's good for them. But what people always have to remember is that the Fed will manage monetary issues for U.S. citizens, not for Argentinians. So if the Fed decided, the Fed will pretty soon be entering an expansionary policy regime, probably in September. That will. It's still going to be a lower rate of inflation than Argentinians have experienced, but it's not going to be perfect. So that's the thing, is that when you use someone else's currency, you're sort of at the whim of their policies.
Well, Pete, thank you very much. This was truly enlightening. Thank you very much for taking the time, and I'm looking forward to many more conversations. We did not even touch the real topic of go into depth of CBDCs and why cash is so important.
Yep.
But I'm sure we will have opportunity. Thank you for taking the time.
Thanks.